In view of rising interest rates and potential inflation, some investors may have concerns about owning bonds. Emory Zink is a fixed income analyst at Morningstar. Emory, can you give us an update on the bond market so far this year? What trends are you seeing?
Well, something that I think is really important to keep in mind, if you're asking yourself the question, should I remain invested in bonds, is consider your portfolio from like a holistic viewpoint. If you're in bonds, there's a reason that you're in bonds. But with that said, there have been a lot of headlines about rising interest rates. There was a rate rise by the Fed in December 2016, then one again in March 2017. A number of the managers that we've spoken with, they expect 1 to 2 more rate rises this year. And while that does have an effect on the bond markets, really, if you've chosen a good bond manager, they're managing those risks, and that's part of investing in bonds.
Low yields have been a persistent challenge for investors. What's the outlook for taxable bond yields this year?
When we're forward looking, a number of portfolio managers have discussed with us the potential for volatility. The current presidential administration has a number of different policies that they want to enact. A lot of that is discussion. Nothing is formalized at the moment. So, depending on where tax reform, infrastructure, even if healthcare is brought up again, where those policies go could change the outlooks for the bond markets.
In the current bond landscape, where do you see potential opportunity for older investors who may be in or near retirement? How important is quality?
Well, quality is always very important. It's much easier when you're on the higher quality side of the spectrum to sort of relax. With that said, if you're reaching for yield, you're going to go a little bit lower. Sectors such as high yield, often emerging markets debt, those all have, of course, lower quality ratings, but those are for particular kinds of investors. I'd say for someone who's older and nearing retirement, most of the bond funds that are in their portfolio are probably a good bit on the higher credit quality spectrum side, and there's a reason that they're in those, and you just kind of want to stay the course.
Wrapping up, in your view, what's the smart play for investors when it comes to taxable bonds?
The smart play is really to pay attention to what your manager is doing. Look for a manager who's consistently following the strategy that they tell you they're going to follow. It doesn't necessarily mean a bond strategy that is without risk, because we invest wanting some returns, but a strategy where the manager is taking calculated risks that you are comfortable with.